I think most of the bad leverage was taken out in June, and this was the final part that should have happened in June but didn't. So what are the knock-on effects? Well, normally if Alameda had gone bust, the knock-on effects would have been Celsius and BlockFi, etc. They already went bust. So we've got the knock-on effects of FTX having bought them and then can't fund them. But I think that was a kind of known failure. So is there somebody bigger here that is yet to get knocked on? Some people have looked at the banks like Silvergate. It's possible. I don't think that it's systemic for the banks in that respect, the crypto banks. Signature, Silvergate, those two are the main lenders in the system. What I do know is there's a lot of hedge funds trapped in FTX because FTX was really the avenue for the ability to short markets via the perpetuals. So a lot of hedge funds use them and they've got that assets trapped, which is a shitty situation for everybody involved. And I don't know how that resolves. I got caught out in MF Global myself. It was very similar. It took a while before we got our money back, but we got a big first tranche back. And then eventually over time, as the administrators and liquidators sorted it out, we got the rest back, but that took years. So that's one of the reasons I think the markets have been less aggressively pricing the downside. It's difficult to short the markets. A lot of the hedge funds won't use Binance, for example, because they can't get it through compliance. And a lot of the other products aren't available on the other exchanges. So it's kind of muted the market, which is why it's been so quiet. But there could be other shoes to drop. I don't know really who they are or what they are. People have been looking at Genesis, Jump, and the other market making firms. Is it possible? Well, they've all said no, but as we know, that means nothing in this world because everybody says, no, we're all fine. We're just going to have to wait and see. But I am biased towards if there is another sell-off, you want to start aggressively adding into it because the macro cycle is turning. And I think this is the final phase, the capitulation phase. And
crypto's latest stab in the back came Wednesday morning as the lending arm of crypto investment bank Genesis Global Trading temporarily suspended redemptions and new loan originations, adding to the rapidly widening fallout from crypto exchange FTX's collapse. Bitcoin was recently trading just below $16,600, down 1.4% over the past 24 hours as Bitcoin investors resumed their defensive posture of the past week. Ether was recently changing hands at around $1,200, a 3.7% decline. Other major altcoins were largely in the red, with CEL and UNI both off more than 5%. FTX's FTT token declined nearly 4% and was trading at just $1.66, far removed from its high nearly $36 earlier in the year. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook on the recent crypto crash and Bitcoin's performance after the FTX collapse, along with his thoughts on accumulating Bitcoin in these times.
I've been around this market since 2013 and I've been through all of these and I've seen all of them, and the sentiment is as shitty as I've ever seen it, for obvious reasons. A lot of people have lost a lot of money being caught in all of these kind of fake crypto, which is, they're centralized, they're opaque, they lend your money out in ways that you don't understand to give you a yield which you're grateful for until you realize that you've had open-ended risk on the back of it, which is one of the reasons I've said, please don't don't use yield. Staking yield is fine as long as you understand that your risk is the currency that you're staking in, which is Ethereum or Solana or whatever it is. That moves up and down. You're going to make or lose money according to that. But the yield is relatively safe because it's written into a smart contract. Yield otherwise, I don't like. I don't take it. I don't use it. Same with leverage. I don't like leverage. If you're going to use leverage, and people will come to me and say, well, you said you were leveraged long in Ethereum. I used call options that had 5% of my capital at risk, and I got a wrong bet, and I lost that 5% in the call options. Totally defined risk. So it's defined risk taking, and options are great for leverage like that. They're not easily available in crypto. Foreigners can use things like Deribit. Now, Ledger X, which was the US version, is all tied up in this bloody Sam Bankman-Fried mess. So I don't even know how that's going to work. And that's another issue for the hedge fund market. There's no option market unless you can trade offshore. So it's really complicated out there. But let's wait and see. But don't use leverage. If you do, use call options, but you still have a risk the exchange goes under and you might not get paid back even if you win. So just be careful with this stuff. Don't risk your life on it. And don't use yield unless it's staking yield and you understand you're taking the risk in the underlying protocol. So let's see how much longer it takes to play out. The answer is I don't know. Market could have rallied today, didn't. So, maybe we've got the other leg lower. I think people want lower. I think there's a lot less buyers around right now, again, because a lot of hedge funds have got their positions trapped. I run an asset management business that invests in hedge funds. We had one that got trapped. A few have had some of their balances trapped on FTX. So it doesn't look as systemic as I feared, but I don't know yet. So, but again, it's not that the hedge funds are going to go bust. It's just their capital gets frozen. So it's a bit weird.
A multi-billion-dollar lending unit of a cryptocurrency firm has been forced to halt withdrawals, the company's CEO announced. Genesis Global Capital, which had $2.8 billion in total active loans at the end of September, blamed the collapse of the crypto exchange FTX for temporarily suspending its services.
The macro for me has been, are things turning? Is inflation coming off? And is therefore the rate of change of rate increases going to reduce or not? So my view is that we've seen the peak in CPI. The market's starting to realize that they've been overestimating CPI and therefore inflation is going to start coming off. We saw that with PPI today as well. And I think we'll start to see unemployment pick up, whether it's this month or next month. Those are the signals the Fed is looking for to slow down. So when they slow down, it's the rate of change of interest rates that matter, whether they do another 50 and another 25 or another 50. Either way, we're getting towards the end of the rate cycle where they will pause. The pause is enough for the market to perceive it as the lack of pressure holding this balloon underwater. And when you take it off, the balloon can rise. And we've already seen the equity market take that well. I don't believe that means if the equity market's going up, inflation's coming back all over again, we're in a big mess. I just think the Fed just stay on pause and wait for inflation to fall below the Fed funds rate. My guess is inflation will be below 4% sometime around February, March of next year. And in which case, if it continues to fall, which is my base case, in fact, I think inflation goes negative, then we will see the Fed eventually pivoting and going to rate cuts instead to stimulate. But that game is to be played for. Right now, it's a matter of the end of the macro story and liquidity coming. The global liquidity cycle is currently led by China. Chinese liquidity has turned up, and I put a tweet around this amongst all of my macro crypto views. Chinese liquidity leads. Global M2 should follow. And as we start getting through the liquidity cycle, liquidity is one of the key drivers of crypto.
So, are you accumulating or selling Bitcoin during this crash phase? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.